Good afternoon, guys. It's Workin, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the 4-hour chart on Coinbase. And last time we spoke, guys, Bitcoin was sitting right up in here, sitting at about 63.40, somewhere thereabouts, guys. It had set a low right here. I told you guys as it was sitting up here, I told you guys more than likely we were going to be coming back down. Or excuse me, guys, I think actually it had wicked right into this zone here at about 62.70, I believe, the last time we spoke. Yeah, I did do an update since then. And I told you guys as we had this nice little bounce off of that area, it was testing up here. I told you guys more than likely we were coming back down for at least a retest of this wick. Let me zoom in here so you guys can see a little bit better. And I told you if this wick was taken out, as it was here, I said we were very likely coming back down to at least 62.35 initially. That's exactly what happened. Price came down, bounced perfectly to almost literally to the dollar off 62.35, bounced right back up into this this area right in here. And usually, guys, and this is a good kind of teaching moment. Typically, guys, what acts as support when it is broken will usually act as resistance. And if it does, you can oftentimes you can bet on that trend to continue. So in other words, we saw price break down below here. This was support. That support was broken decisively, bounced back up. And on the retest, as it bounced back up, if it just would have passed right through this area, guys, that would have been, we could have called this a possible bottom, a very likely bottom even. But the fact that it came up, it bounced, and then what was support acted as resistance and rejected hard, that was a very telling sign that we were going to be going much lower and that this support down here would very likely get broken. So this is a kind of a pattern, guys, for those of you that are just learning to trade. This is the kind of pattern I want you guys to take note of. Anytime you see something like this where a support, and it also works in reverse, where a resistance is broken, and if it comes back down, that resistance then acts as support on the retest, that's a good sign that bullish momentum will continue. In this case, it was bearish momentum. We broke through support, came back up. That support then acted as resistance. It was unable to break through, and that was a very good sign that we were coming back down much lower. Sure enough, price broke back down strongly, passed right through, didn't even acknowledge a second time this 62.35 support. That broke down, guys, and now, of course, we've broken down much further, and what we're approaching is an area that's going to be very telling. I pointed this out last time. I know some people are drawing their trend line. They've got this ascending support, this ascending trend line that they're drawing. They're kind of cutting off the wicks, and they're drawing it right here, and they're saying that this has been penetrated. I'm not doing that. I'm more of a purist when it comes to that, at least on this in particular, because I do think these wicks are very relevant. I'm drawing my trend line literally right where it came. I'm not cutting off the wicks at all. So we've got a test here, 1, 2, 3 separate times. This trend line has been tested here in the, 4 separate times. 1, 2, 3, and 4. This trend line has been tested by a wick, and now it's coming back down. And while there's a little room for error, pretty much it's testing this ascending support line for a 5th time. And if this trend line does break, guys, does break decisively. I want to make sure I say decisively, because we can wick through it all day long, and that's fine. But if we get a decisive breakthrough, in other words, if we get a 4-hour candle that not just opens, not just closes, but both opens and closes below this ascending trend line here, that's going to be a very, very bearish sign. Now, the 61.15 support, I'm going to be watching as well. We may see price wick right through this trend line, just bounce right there off that 61.15 support, maybe even wick through it just a little bit, and then bounce right back up. That's a very real possibility. But I do think if 61.15 does break down, guys, I do think there's a very good chance that we're coming back down and testing those 2018 lows. At least around 5,800, somewhere thereabouts, if that 61.15 does break down. Now, that'll be a very big sign if that does happen. If we take out this prior low here, this which sits on Coinbase, that sits at about $6,040. This wick right here, if that is taken out, guys, at that point we will no longer be creating a series of higher lows. At that point, we will have just created, if it does break below that, we will have just created a lower low for the first time in a long time. And as I said before, that's a very bearish sign, guys. Now, that could mean we come back down for that lower low. This is a I think there's definitely some manipulation going on here. So that could be a bear trap. In other words, words, trapping people into going short, trapping people into short positions, and then they turn it right back around. That's a possibility. But if we sit down here for any amount of time, especially if we break below $6,040 for any significant amount of time, guys, I do think there's a very good possibility that we're going to come back down and test at least 59, 5,800, somewhere thereabouts, those prior 2018 lows. Excuse me. All right, sorry guys, had to pause the video there real quick, go drink water. So yeah, what was I saying here? We're saying that, yeah, if 61.15 does break down, guys, that will, and breaks below this this prior low here at $6,040, at least on Coinbase, then more than likely we're coming back down and retesting possibly the 2018 low, certainly probably into this range down here between 5,900 and 5,775, in my opinion. Possibly looking for a bull trap in that area, but yeah, if it breaks through and starts consolidating with any length of time, spends any length of time down there, I think it's just it's going to just end up collapsing down to those prior lows, and we can look for a bounce possibly in that area. Keeping into mind, always keeping in mind this bigger picture, guys, looking at log scale on the monthly. I know I show you this every time, but for the benefit of those that haven't listened to my past videos, this course goes all the way back to the end of January 2017, or excuse me, the end of 2011, I should say, the end of November 2011, and this shows this trend line has been in place for for that many years, for almost 7 years now. Pardon me. And so we are approaching that trend line, guys. That does suggest a major bounce should be coming in the next month or so, as I've been telling you guys. And if we zoom in here, that doesn't mean that we can't come back down and possibly test these lower levels, as I've shown you guys. These lower levels possibly even going as low as about 5,500, somewhere thereabouts, guys, and that would still keep us above this trend line. Excuse me. So we're going to be watching and waiting to see if it does end up coming down that low. But one of the things that we're keeping an eye on, why I find it kind of possibly just a coincidence, we'll have to see. But even if we did come back down, test this trend line, that trend line sits at about 5,500-ish, somewhere thereabouts. Now, if I take log scale off and I go back and I look at the bigger picture here, let me get back out to the, let's throw up the weekly chart here so you guys can see a little bit better. I've shown you guys this in the past, if you watch my past videos many times, how the market has just, been slowly weakening all year to the point where now we're just at a flat line. But what I want to point out this time is this very strong supply zone, demand zone, very strong demand zone that we'd have down here between about 57.75 and about 54.50, somewhere thereabouts. We can see if we go back all the way to October of last year, this demand zone was created. When price came back down, wicked through it, bounced back up, wicked through this again, bounced right back up, came back down, wicked through it, and then took off. So this created these wicks here suggest a lot of buy orders that are still sitting down in here, guys, that are still unfilled. And again, that could be as low as 57.75, which happens to also be the prior 2018 low. We can see that was set right here, I believe. Again, at least on Coinbase, that was right exactly at 57.75, all the way down to and including 54.50. So is it a coincidence that right where we are right now? If I go back and look at that log scale chart, is it just coincidence? Let me throw the log scale back on. Is it just coincidence that log scale chart, if we go straight down and we looked at this today, that would hit right at about 5,500-ish and still stay within the trend? Yeah, it might be, may not be. We'll have to wait and see, but it's certainly interesting to see. And it's also interesting to note that we've been in this massive uptrend for so many years, and we still are in that massive uptrend. Now, that doesn't mean this line can't break. Every support line, it doesn't stay support forever. Eventually, it usually does break. And of course, this could be that time where that does break. If it does, we're going to be coming down to much lower prices, and you should be prepared for that. You shouldn't be going in at all until we establish a new trend in one direction or another. That being said, guys, it does look like we are going to get that new trend established, and probability until this does break, probability tells us that there's a very good chance that it will bounce and we will start that massive bull run. Now, either way, even if this thing does break, and if we fall down to much lower prices, $4,000 or $5,000 Bitcoin, even a $3,000 Bitcoin, I still believe that this time next year we're going to be sitting at all-time highs for Bitcoin. I still believe, that just may be the catalyst that is needed to bring new money into the market. Either we're going to go on a bull run based on some very bullish news, ETF approval, institutional money entering, Amazon, using Bitcoin for payments, or some mass adoption by some major company, some kind of catalyst like that, or price is going to drop low enough that institutional money and retail investors get interested again and start buying it right up. One way or another, I do believe this time next year we're going to be on a massive bull run. And of course, I do think this new trend, as I pointed out many, many times, is going to start in the next month. Just my opinion. If I take log scale off, we look at this with or without log scale, we can see certainly price is getting condensed within this wedge here, getting squeezed tighter and tighter and tighter within this larger wedge here, guys. And that's only going to last so long as we approach the apex here. Eventually, that tells us, probability tells us that that is going to break decisively in one direction or another. Now, this is that. Excuse me, guys. Now, pardon me, guys. Let me get a drink of water. Okay, sorry about that, guys. Now, this is a descending triangle, and that, typically that oftentimes that does break bear. That being said, this has been tested so many times, and we know that institutional money is just around the corner. Possibly, starting in 2019, we could get ETF approval, and we know that's going to just open up the floodgates. So this thing could, even though probability is in favor of a breakdown when you're looking at a descending wedge like this, the trend line, the overall larger trend line that I showed you guys earlier, that larger ascending support line, probability tells us there we should get a major bounce. So, really, I can see this thing going in either direction, guys. The only thing I'm sure of is, the only thing I'm relatively sure of, as sure of you can be, as sure of something as you can be in this market, is that we are going to get a new trend that is established, possibly by the end of November, sometime early December, in my opinion. So, is this a good time to buy Bitcoin? If you're holding for the long haul, slowly dollar cost averaging in is not a bad idea. I've told you guys in the past that my buy zone is between $6,035 and $6,115. These two areas right here, we can see in the past that just looking at this zone in the recent past, that has been playing this range here. That has been a good buy area in the past, and selling anything above 63.60. These have been very good scalp trades and been very successful scalp trades here in the past. That's not a bad idea if you're looking for a scalp trade, guys, to maybe slowly or maybe take a small position here, targeting anything above 63.60 to still continue to try to play this range. But as things get tighter and tighter and get squeezed tighter and tighter, as we see here, guys, that range gets squeezed tighter and tighter. Now probability starts shifting away from these ranges. Now it's still, it still wouldn't be a bad idea to have a small position here, but I would keep it very small and have your stop loss very tight. In fact, I'd have my stop loss probably right at 61.15, maybe just below at about 6100, somewhere thereabouts, guys, if you are looking for a scalp trade. Now, if you're looking, as I always tell you guys, if you're looking to hold this for the long term, then of course, dollar cost averaging into a position, throwing it into a long-term hold portfolio and forgetting about it is not the worst idea. So even if this thing, you just want to make sure that if this thing does end up breaking down, and we do come back down to those lower prices, that you have fiat on the side so you can take care of it. I know I tell you guys this all the time, but I just keep repeating it for those that don't keep watching my videos, as I've said in the past. All right, looking at the 4-hour chart, looking at our moving averages and exponential moving averages, we can see that price is well extended on the bottom Bollinger Band here, has been now for since let's see, November the 12th, and still continues to be. Does look like it's right for a possible bounce, at least here in the short term, coming back up. Now, whether or not we're able to this is a nice reversal. We're not seeing any signs of a reversal yet, but we are seeing signs of a possible little bounce, possibly coming back up to retest the top of this candle at about 62.20, then coming back down again, possibly retesting our 62.20, 62.35. What was support should act as resistance. We'll have to wait and see if that does end up playing out. But if we do get a bounce here, we do come up and we do get a strong rejection at 62.35. Not just a rejection, not where it just sits right below there, but comes up, strong rejection right below that. At that point, guys, we may be coming back down to much lower prices. So we'll have to wait and see how it reacts if and when we do get that little bounce right here. But again, all eyes are watching this trend line and certainly watching 61.15 to see if we break below it. Looking at the daily, we're seeing the same thing, very small, very strongly extended to the stretching out the bottom of the Bollinger Bands here, guys. Again, looking like a ripe area for a possible bounce. Certainly not a bad idea to slowly dollar cost average in, or slowly maybe play a very small swing trade. Just make sure you always have your stop losses very, very tight. Coming over here and looking at our long and short positions. We can see long positions here are relatively unfazed, slow little uptick here in the last 8 hours or so, but nothing too significant at all, really. Longs just remaining fairly stagnant. Looking at shorts, however, shorts are on the rise, and this is a little bit concerning, the fact that we're having retail investors start to chase price again. Now, it isn't at a relatively high degree at all at the moment. This is still relatively, all things considered, is still relatively small, but shorts are starting to close the gap on longs again. Longs still outpace shorts at this time, but shorts are still slowly starting to close the gap. If that does continue, then more than likely we are going to stay within a range here. More than likely, we may come back down, may even fake everybody out coming out of this trend line, testing this this prior low at $6,040, and then impulsing up right from there. But yeah, there's no question, if shorts continue to rise like this at a steady pace, they continue to rise, and longs start to remain stagnant or start falling off the board, then very likely you're going to see market makers turn this thing right back around. We'll have to wait and see how this plays out. And as I'm writing this, guys, looks like we're just wicking outside the trend line here, possibly coming back down for a test of 61.15, and that'll be very interesting to see if that 61.15 can end up holding, guys. Remember, if 61.15 decisively breaks, and by decisively again, I mean a 4-hour candle that both opens and closes below 61.15, certainly if we take out this prior low, guys, that's going to be a very, very bearish sign. So I have to watch and wait and see how this kind of plays out. But again, I can see a very quick wick right below it, and then impulsing right back up. That would be, I can certainly see that happening, and we'll have to wait and see, kind of as I said, guys, how this ends up playing out. But for now, things are looking rather bearish. Slowly start dollar cost averaging in. Not a bad idea, guys. I would just make sure you have a very, very tight stop loss. I'm going to go ahead and wrap it there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, I would appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe. Take care of yourselves. This is Workin, signing out.